Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, as per the title of this video, I'm going to be showing you a chart which has predicted every single major rally over the last 13 years. And a new signal is now flashing. So we'll have a look at that. I'm also going to be having a look at the supply and the demand of the amounts of Bitcoin that are in circulation and why that's very important. I'll also have a look at the 60-day cycle and what that's telling us in terms of where the market wants to go in the next few days and weeks. And finally, I'm going to be going through an amazing opportunity which is presenting itself in the Bitcoin miners, which is the same opportunity that was available at the end of last year. And we'll have a look at the possibilities of how far the Bitcoin miners can go against the Bitcoin price. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm just going to start off with this long-term picture view of Bitcoin over the last 13 years here. And the reason why I like showing you this is just so that we can actually frame everything else with the background of this larger, bigger picture view. And as I showed you in last week's video, these white boxes that I drew were the boxes for every single November and December over the last 13 years. And what I wanted to highlight there was that they always seem to be at the bottom of a trend, like this one here, at the bottom of this trend here, and then the start of the bull market here, then at the top of the trend, where you're going to expect a fall, then at the bottom of the trend, and then once again, at the bottom of the trend coming into a big bull market, etc. You'll see them at the tops and the bottoms, usually within the 4-year cycles, as you can see. And currently, we're in one of those trends now. So we're coming up to November and December. We topped out at 69. We bottomed out here in November, December 2022, and we're expecting the beginnings of a rise over here in the next 2 months. I know everybody keeps talking about what's in the news. There's a war going on. The economy is in a recession. Interest rates are going up. Everything, all that kind of noise, whilst at the same time, in the last 13 years, the Bitcoin price has just followed this 4-year cycle. And along the 13 years, there's always been things in the news, in the background, which everybody gets distracted by, but the charts don't lie and they carry on doing what they've always been doing. So my focus currently is basically on the November and December, because I think there's a great opportunity coming up with the Bitcoin miners in this time period because of what's happened with Bitcoin in relation to the Bitcoin miners. So everything I do in this video is with the background and the foundation of knowing that we're in the current 4-year cycle, we're coming up to the November, December, we're going to have some sort of a movement according to what's happened historically, and until something changes, we've got to stick to that narrative. Okay, so I'm going to go through this particular chart that has predicted every single major rally over the last 13 years and what the current signal is now flashing. This chart is called the money flow oscillator. This is the amount of money flowing into this particular asset. It's a very simple chart and you just have to look at it on a very simple basis. So what you've got is a baseline down here, and this is the Bitcoin price. And we can see that whenever we go below this line and then come out of it, so this is the point when it comes out of that baseline, which is noteworthy because that seems to always coincide with a big move to the upside for the next 2 years here. So this is 2015, and this was the beginning of the 2-year rally that we got to the end of 2017. Then in 2019 here, you can see that we went below this line one more time. When we came out of it, that was the beginning of the big rally that we had in 2019 up to 14,000. The COVID situation brought it back to this line one more time, and we got a double bottom right to the baseline, and that was the beginning of the last bull cycle up to 2021. So what is it doing now? If I move the chart to the left here, you can see quite clearly we are coming back out of this baseline one more time, and this time we've gone a lot more below this line than in the previous times. But what we're doing now is we're looking at it right at the beginning of what we would expect a big move to the upside over the next 2 years. This is what I've been talking about for many, many months, We've got to concentrate between now and the end of 2025. And all these types of indicators are presenting a great opportunity to do that. Okay, I'm just going to have a look at the overall picture with the daily chart and the weekly chart and a few of the other indicators to give us some sort of a semblance of what's going on currently with the Bitcoin price here. So just to explain, this orange line is really at the tops of the previous peaks that we've had. So what I would expect is when the price comes back up to this line here, you would expect another rejection like this. Wherever the price comes along this trend line, you would expect a rejection at that point. So just keep this in mind, or even on your charts, draw this line from the peaks here back in August 2022, April 23, or if you want to move this down and get a third point, which would be about here, let's say. So this could just be a little bit of a fake out here. So you could got 3 points here. So just be aware of this trend line at the top. Very important, because you know that this trend line is being respected along this way here. And we've got this green line, which is the current support line for this Bitcoin move that we've had since the 15,400. And we found support on this green line 3 times recently. So it is actually respecting that. And it goes back to this point here around December 2022, last year. And if we zoom out, the red line tells you something else. And that goes back all the way to 2018. And it's found support all along here for so many times, all along here. And that's going to be important because when we do have a correction up here somewhere, so we get to whatever 48, 49,000 here, there may be a correction. It'll be the red line that it's going to come back to before the big move into the parabolic end of the 4-year cycle here at the end of 2025. So very important, these lines. Okay, so in last week's video, I did show you that this fake pump that we got here with this candle, so what was happening when I did this video afterwards, I was saying to you at the time, last Monday, that the price hadn't retraced all the way back down to the lower levels of that pump, just like it did over here when there was a grayscale pump that we got. So the price afterwards came all the way straight back to baseline here. And because it didn't do that, that was a very bullish move, and it was a market trying to tell us that it's not prepared to come back down here. And the reason I gave last week was that people were holding their positions no matter what. They were having a wait and see attitude, and that's because of the ETF expectation that was building up. But there is still the word of caution here that if in the unlikely event that Bitcoin doesn't get the ETF approvals very shortly in the next few months, then I think you'll find that we're going to end up breaking this $25,000 mark to the downside, and it may have a very sudden move down here. So just got to be cautious about that. Not that I'm expecting that. And currently we're testing the previous highs around here between the 30-31 range. Okay, so moving on to the 60-day cycle, just want to mention that since we topped out over here at around about the $31,000 mark, the market's been really consolidating in this range. And what you normally get with these 60-day cycles, and as I mentioned many times, no single indicator is perfect or works every time. And with the 60-day cycle, what you get with consolidating sideways movements in the price, what you get is a messy cycle. And this is what we've got so far here. And when you get 2 failed cycles like this, their relevance and importance goes out. But that doesn't mean that we can't still work out exactly where this is going, because sooner or later, it's going to go back to being relevant and important again. And we just have to accept that that's okay. That's not something that we need to get too worked up about. And as Walter Bressart, who created these 60-day cycles, even he says, well, this is not a magic indicator, but use it when it's an advantage to use it. And that is usually in a trending market. So sooner or later, we're going to be trending, and this is well worth actually following. So the current cycle basically finished here after 68 days. And then we had this failed cycle, which was making a lower low at this point here. So we would have expected a move here, which we got with the grayscale news. And then instead of following through towards the middle of the 60-day cycle, it basically came all the way back down to retest the base here. But since then, what we've done is we've created a higher high from the previous high after the 30-day cycle. So what we've now got, right translated cycle, and we would have expected a big move to the downside into the next 60-day cycle. And this red line would have been the end of the 60-day cycle starting from here. And as I said last week, we should really come into the 60-day cycle low, and it may well be we test this down here. But if we don't, this would be very bullish if it starts moving to the upside. And then that would confirm that day 51 is the beginning of the new cycle. And that's exactly what it's done here. So we've got now confirmation, having passed this 28,600, this was the confirmation that this is the start of the new cycle on day 51. And we can take away this 60-day cycle point. So waiting for the midpoint of this current cycle, which started here on the 12th of October. So it looks to me as though if we can make a high here and then go past this midpoint above the 32,000 here to create a right translated cycle, that would be incredibly bullish for a big bounce to much, much higher levels. And this is the critical bit here, and this is where the cycles really come into their own, because this is the start of the cycle, and that gives us that little bit of an edge that if it's the start of the cycle and we're before the 30 days midpoint, then we can expect the price to be going in this direction, making higher highs along the way. And when all is said and done, we are in a bull market here, and therefore we would expect a right translated cycle. And then when we do have a pullback, and like I said, this green line, we could really pull back around here, 35, 36, once we've gone past the halfway line, and then it comes into the 60-day low at exactly this point here, to use this, which was a resistance along here, becomes the support over here. So this is what I'm expecting if this is what happens now over the next few days and weeks. And always remember, there is nothing on the trading view, nothing in the oscillators, nothing in the indicators that actually works in every environment, and you have to work around these cycles. And this is now starting to work very well one more time. And what we really need to do is to really just focus on the 4-year cycle, and we're coming to the end of the year in November and December, as I mentioned, which is often the start of a new low or a new cycle. And what we've really got here, this is very, very impressive, because what we've got is we had a fake pump at this candle last Monday, and since then it's actually held up very, very impressively by going even higher now over here. So we've now got higher than the actual fake pump that we got, where we expected the price to come back down to the base here. So as I've been talking about over the last few weeks, we made the low over here, then we made a higher low, and this was the base I was saying that we mustn't come back to break it, and instead we've made a new higher low here. So this is really quite bullish, and we may go sideways here before we make another surge to make that right translated cycle. So let's just wait and see what happens. I'm still expecting some sort of a rejection around here, because these are very strong resistance points here. So I'm not getting too excited, but we do have the possibility of the ETF news, which can drive the price much higher. And I think most of the rise that we've got is really in anticipation of the ETF news being positive. Just a quick word about the psychology of a market cycle, because it's important to know that we are coming up to the 3rd year of this current cycle. So we've had the first year is the bear market that we've had in 2022, coming all the way from the 69,000 all the way down to here at around about the 15,400. Then we've had the second year, this is 2023, with a rising market. And what's happened is that if you watch enough videos on the YouTube, you'll know that there are still a lot of people doing the videos saying that we're coming down to 12,000, 9,000, 3,000. So there's still a big following of those types of people who still haven't accepted that we bottomed out at this point here in this psychology of the chart at the 15,400. But when we get into the 3rd year, there becomes a realization of those people when we haven't come back to these levels, and some of those people then start trickling in to the other side of the camp, where they start to buy in, and therefore there are less sellers in the market, which leads to a bigger demand for Bitcoin. So supply goes down and the demand goes up when there's a realization that they're not going to get in anywhere below this 15,400. And this is why it's very important that once you've identified the bottom, like we did back in December 2023, it's important to just hold for the longer term, because you really don't know where these oscillations are going to come. So those people who were bearish, who were calling this a suckers rally all the way from December 2023, and they were in disbelief about this particular move, will go into this phase here of hope that a recovery is possible once we get into the 3rd year, and then that will build into the optimism. So this bit here is the 3rd year that we're going to get. So this is what we can expect in 2024, a move to much higher levels and more people climbing on board with a more bullish narrative. And in 2025, this is when we get this blow off top, where everybody jumps on board and the market punishes everybody up here, right at the top. And if we have a look at the monthly chart, it really gives it away, because you can see that we bottomed out here at 15.4 with a bull flag here, and now we're just coming out of it to the next phase of the market. So this is looking really quite bullish. And if we put the exponential moving averages, the blue is the 8, the yellow is the 21, and the white is the 34. And we can see on the monthly chart, having fallen below these three averages, we're making a very strong move to the upside here. So we'll have to wait for another 7 days or so, but it looks with a high degree of probability we're going to close above these three averages. And this is exactly what we wanted to see, because when we zoom out, we can see that this is what happened in the COVID situation and then fell back down at this point, and we've now recaptured it just like back here. So this month is very critical, and those with a very keen eye will have noticed something. This particular pattern over here, you can see very easily is that this is a cup and handle pattern that's been developing. So what we've just done is we've created the handle and we're moving out of that. So once we break this point here, we can expect a move from the bottom here to the neckline here. That would take us all the way up to the $64,000 mark here. So this is the pattern that should determine this particular big move all the way to previous highs. Okay, just moving back to the overall bigger picture view on the BLX chart, on the monthly time frame, we can see that we're in the November-December phase of the market here at the end of 2023. Once we get past that, then the red line, the halving, becomes more in focus. And everybody who's been in this space for a few years will know that this is the point where people will realize that we're in the bullish phase of the market. So the focus at this point after 2023 will always be to the upside rather than those people wanting to pull the market back to lower levels here. So generally the market will become more and more bullish as we get into the halving, and if we get the ETF application approval, any time in between that is only going to be pushing the market to much higher levels. And what that does is it brings more people into the space. So the halving will be when more and more people enter the space with a more bullish attitude. And as you probably notice with the views that people in the YouTube community are getting, there's a lot of disinterest in the market at the moment. And many of the comments are still quite negative. And I think a lot of commentators are talking about the SPX, the S&P 500 index, that closed last Friday right at the baseline at this point here. So a lot of people predicting this to happen, which could obviously bring Bitcoin price down as well, with some sentiment being on the negative side. And obviously this is a possibility, but we are at the baseline here. It could easily bounce back up from these points back to the upside, creating this double bottom. And confirmation of this double bottom will be when the price gets above this 43.70 level. So be aware of that on the S&P, because when you zoom out, you can see that it did exactly the same back here. When it went above that point, that's when the big market move occurred over here. So this is a smaller version of very similar to what happened back here again. So only time will tell. No one knows the future. All we can do is look at the charts and speculate according to what the candles and the patterns are telling us. So I'm going to now move on to the Bitcoin demand and supply. And I'm going to this article on the October 19th last week, which tells us that Bitcoin's long-term investors own over 76% of all Bitcoin for the first time. So this is the highest personal holding for the long period of time in the Bitcoin space. And if you scroll down, we can see that this 76% is more than at any point in history. So altogether, there are about 19.5 million Bitcoin that have been produced so far, of which 76% gives us about 14.8 million. So there's only about 4.5 million that people can trade. So what we've got is a fall in the supply of Bitcoin, whilst at the same time, more and more people are getting into Bitcoin and wanting to buy with the narrative that the ETF applications are going to get approved. So demand can only increase. And when we expect the ETF's approval, we're expecting the demand to be around about the $600 billion mark over the next 2 years. So you've really got a perfect storm for a big bull market in 2024, with supply falling and demand increasing in excess of what you would normally have expected at this time of the cycle. Okay, so I'm going to move on to the opportunity which I think is appearing very obvious in the Bitcoin miners in relation to the Bitcoin. And as you know, my holdings for the longer term is all in Bitcoin miners. And an anomaly has occurred between the price of the two. And that is that when the market bottomed out for Bitcoin here on the 21st of November 2022 last year, the Bitcoin price started to move up all the way to 31,800. So what we had there from the bottom here to that 31,800 was about 105% increase. So remember that date, 21st of November is when Bitcoin bottomed out. And for the Bitcoin miners, and I'm representing the Bitcoin miners with Marathon here, the 21st of November was at this point. So while Bitcoin bottomed out at this point and started to move higher, you can see that Marathon continued going down and created a wonderful opportunity at this point. So while the price came down from the 21st of November to the bottoming out at 27th of December, that's 5 weeks, within 2 weeks, the price had been made up. So there was a very quick recovery here. And this was similar to all the other miners. So you could see that with the Bitcoin and the Bitcoin miners, there was a detachment at this point where Bitcoin went up and the miners continued going down. And this presented the best opportunity to get in. And that increase from the bottom here, 311, all the way to 1988, was 540%. So as I keep mentioning in my videos, this is a leverage play. The Bitcoin miners, while they are much more volatile than Bitcoin, and we need to understand the risks, however, the opportunity is in line with that, and that is the leverage play, that whenever Bitcoin goes up by 100%, the Bitcoin miners go up by 3 times, 5 times, and in many cases, much more than that. So this was a 5x move compared to Bitcoin. So Bitcoin went up by 105%, and Marathon here, representing the Bitcoin miners, went up by 500%. And one of them, which did the best of all, was Cypher. That went up all the way in that same period by 1,300%. So this was a 12x from the Bitcoin price. And the reason why I show you this is that if you look at the Bitcoin price now currently, we bottomed out here at around 11th of September. And since then, we've increased in price with Bitcoin by around about 25% here. And that's from the 11th of September. Whereas if you look at the Bitcoin miners, from the 11th of September, the price for Marathon has actually gone by 34%. It's doing exactly what it did at the bottom here. When Bitcoin went up at this point, the miners came down. And similar here, when Bitcoin's gone up, the Bitcoin miners have come down. So this is similar to this opportunity here. Obviously, this is not financial advice and everybody has to do their wider research, but we do have the similar anomaly with a great opportunity to move back to the upside here. And what I would be expecting over the next few months, that if this is the bottom with the Bitcoin miners, just to get to the previous high here at 1988, that would represent a 175% increase. So while Bitcoin is already at its recent highs around the 30-31 mark, the Bitcoin miners are showing a big anomaly with the opportunity to the upside of around about 175%. So those people who are interested in the Bitcoin miners and want to build a long-term portfolio, so for those people who can see a great opportunity and want to build a little bit of a long-term portfolio with the Bitcoin miners, this is an amazing opportunity as I can see it, with the halving in mind. There are about 20 Bitcoin miners, which I've put into 3 tiers based on a number of criteria, such as market cap and Bitcoin production, the debt situation, etc., and the potential to outperform over the next 2 years. And in the last 2 years of the previous cycle, which is the point we're at the moment, the Marathon went from this point here around about in October 2019 to its top of $84 by 51x. So while Bitcoin went up by 6x, this went up by 51x. So you can see the potential in the Bitcoin miners with a 2-year view. This is what we can expect based on the previous historical cycles. And this huge potential can be unlocked by joining our private Bitcoin miners club that we run here. So if you are interested in the Bitcoin miners, then all you have to do is go below any of my videos, click the join button here, and for the price of a coffee per week, we do 1 video every single Wednesday and some bonus videos in between when there is a need for them. You can cancel at any time, there's no contract, everything is hassle-free. And in the Bitcoin Miners Club, we cover the long-term portfolio as well as swing trades and undervalued Bitcoin mining companies. So obviously this is not financial advice, but certainly a big opportunity is definitely potentially in the making here. And currently we're in 3 swing trades with the Bitcoin miners, in which I've given the entry points, the exit points, and the stop losses. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you have any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.